The 5 wave trends are then corrected and reversed by 3 wave countertrends. Letters are used instead of numbers to track the correction. Check out this example of a smoking hot corrective 3-wave pattern. Just because we've been using a bull market as my primary example doesn't mean the Elliott wave theory doesn't work on bear markets. Types of corrective wave patterns. According to Elliott, there are 21 corrective ABC patterns ranging from simple to complex. 21. I can't memorize all of that. The basics of the Elliott wave theory are already mind-blowing. Take it easy, young Padawan. The great thing about Elliott wave is you don't have to be above the legal drinking age to trade it. You don't have to get a fake ID or memorize all 21 types of corrective ABC patterns, because they are just made up of 3 very simple, easy to understand formations. Let's take a look at these 3 formations. The examples below apply to uptrends, but you can just invert them if you're dealing with a downtrend. Zigzag formations. Zigzag formations are very steep moves in price that go against the predominant trend. Wave B is typically shortest in length compared to waves A and C. These zigzag patterns can happen twice or even thrice in a correction. 2 to 3 zigzag patterns link together. Like with all waves, each of the waves in zigzag patterns could be broken up into 5 wave patterns. The flat formation. Flat formations are simple sideways corrective waves. In flats, the lengths of the waves are generally equal in length, with wave B reversing wave A's move and wave C undoing wave B's move. We say generally because wave B can sometimes go beyond the beginning of wave A. The triangle formation. Triangle formations are corrective patterns that are bound by either converging or diverging trend lines. Triangles are made up of 5 waves that move against the trend in a sideways fashion. These triangles can be symmetrical, descending, ascending, or expanding.